Good news for U.S. housing. The housing market appears to be getting a little stronger. The number of Americans with contracts to buy previously owned homes rose last month to the highest level in nearly 2 years. The index of sales jumped 2.5%. Home buying is now becoming within reach for more Americans because of two reasons. One, record low borrowing costs, and two, less expensive properties. The data shows the buyers are back. Sales of both new and existing homes are rising. But not so good news for college graduates. For them, buying a home remains a distant dream. A recent study found 40% of graduates have delayed buying big-ticket items such as a home and a car, but mainly because they're in debt. Across America, student debt now tops, get this, $1 trillion. Yakenda McGahee has more on a new report that shows students are worse off today than they were a decade ago.
Operation Hope, a nonprofit economic empowerment organization dedicated to improving financial literacy, has had a revolving door of people in need of rescue from real estate foreclosures and other personal debt problems.
Is this a notification that came from the bank here? Is this letter?
In the last few years, there's less loan products available and less flexibility in the loan process. So folks that traditionally used to qualify for loans can't now.
Young Invincibles, an advocacy group for Americans ages 18 to 34, say there's an even bigger casualty of the Great Recession and real estate market crash: recent college graduates. They released this report which found today's graduates are earning a fraction of the income, but are burdened with twice the debt of their student counterparts who graduated a decade ago. They say a large percentage of younger adults are literally locked out of home ownership because they can't qualify for a home loan based on their debt-to-income ratio.
The debt-to-income ratio basically is just taking what your current income is, and then also taking a look at all your current debts, adding in what your proposed mortgage payment would be, and coming up with a ratio that needs to be somewhere around 30 to 35%.
The report calculated average student loan debt among other factors like median income. It found the average debt-to-income ratio for a student who graduated in 2004 is 49%, meaning half their income goes to debt. And it also means they wouldn't qualify for a mortgage by today's stringent standards.
It's becoming more difficult, and I mean the reality is that people need to be more accustomed to delaying gratification.
Operation Hope believes there is still hope. While stricter loan qualification requirements have steadily increased, they say property values have been steadily decreasing, which means so too will mortgage payments. Yakenda McGahee, CCTV, Los Angeles.